Hi guys, welcome to RSK Originals. Today we are going to discuss about coppock. Coppock is one of the good indicators used by most of the traders. Uh, Today in this video we are going to see about how to use the coppock for the crude intraday and for the stocks for the long term. Let's get into the video. Before that, we should clarify what is the coppock with the PPT presentation. Okay, then we can move to the charting platform and we can discuss it briefly. Yeah, what is coppock curve? The coppock curve is used to spot long-term trend changes in the major stocks. Before during the invention of this coppock curve, they used this for the long-term uh, charting platform, like they used for the weekly and monthly charting platforms. But after it worked well with the short-term intervals, they also use for the uh, day wise and also 10 minutes, 5 minutes, 10 minutes, till 5 minutes. Also, they are using this coppock curve. The another thing is traders using this coppock curve for any time. It is also used to generate the entries and exit level of the trading. Like it can be also used to identify the trend reversals, when to exit the strategy, something like that. Then we can move to how it is formed. This is just for some clarification. There will be three variables to form the copper curve. One is short ROC period, long ROC period. One is set for 11 period and another is set for 14. And also they are using the weighted moving average, which is set around the 10 period intervals. This is only for your view only. uh, Mostly we will be skipping this one. We can concentrate more on trading. Then how to use this strategy, like we will be going for long or buy position when the CC goes above zero. The CC here means coppock. When the coppock goes above the zero, we should go for long or buy position. When the coppock goes below zero, we should go for short or sell position. We should exit the position when the copper curve again comes to zero. For example, if you place a buy order when copper curve goes above zero, when it again comes to zero, you should exit your trade. Similarly, for the short positions, like if you make a short position when copper curve goes below zero, when it again comes to zero, you should exit your trade. This is what it means. Then before seeing the disadvantages, we can go for the charting platform and discuss, and then we can come back here. The charting platform I am using here is Upstocks Pro. And the chart you are viewing is the crude oil future for the current month. Now we are going to see up, how to apply the Kapoko in this chart. Go to studies, then type Kapok CO. Yeah, it came. I'm just clicking this coppock from the studies. As you can see, this is the coppock I meant. And I forgot to say this one. I'm using the 10 minutes chart right now. You can also change to 15 minutes also, but I'm using the 10 minutes chart right now. You can see when it is yeah. Let me take this one. When it goes above one, you should go for the buy. This one, this is why you should go for buy. Here you can, the charting platform, you can see here you should go for buy. And also when it comes to, again it comes to zero, you should exit your position. When it comes to zero here, this is the point I am exiting the position. While I am going for trading, it was 2494, something like that. While I'm exiting the trading, it was around 2523. 2491, some 30 to 40 points you're able to score here. And also for the short position. See this one. uh, Here you can go for short position below zero. When it goes below zero, you can go for short position. In the chart you should go here. That means in parallel to this copper curve. If you go here means you can wait till here to finish off your trading. That means you are applying this strategy this point. You are selling this crude oil at this point, and you are close exiting the position in this point. That means around around 2508 to 70 to 2535, around 35 points. If you place one lot means 3500. This is what a copper curve will work. Let me zoom over this chart. Now you can see clear. If you For example, if you place here, if you place the long position here means parallelly you will be buying here and you will be selling here. Like that you will be getting the this value profit in your trading account. uh, though it is the good strategy, uh, still we are having some disadvantages. Let's discuss that one. uh, Disadvantages. If the sometimes it will work well. In the worst case, it will also go against our prediction. Like if you go for buy position means it will the graph will go down. Like the price value will grow down, and also in the other case, if you go for sell position, the price value will it will increase. In that case, you might affect with loss, and also there will be more losses. Since we are exiting at the zero level, we may miss the high profit sometimes. What does it mean? Means I'll be telling you from this chart itself. I'll be giving you some scenario, like good scenario. Uh, yeah. Let us discuss these two disadvantages in detail. The first disadvantage is sometimes if the kappa curve if the curve moves above zero, you will be going for long position. But in the chart you will be seeing the price level will be decreasing. In that case, you will be facing huge loss. At the same time, if the kappa curve goes below zero, you will be going for sell position. At the same time, the price will be increasing. At the in this scenario also, you will be facing loss. This is one of the disadvantage. The second one is, as you can see here, in the trader's perspective, uh, you will be short your position at this point, at this red candle, and you will be exiting the position at this point. As you can see, at the end of the trade you will be losing some points only. You will not be earning anything. To avoid this, you should go to the you should short your position from here itself. When the kappa curve increases from zero and it went to saturation level, as you can when it starts going back to the zero level, that from the peak, you should go for short position. And also, while you are exiting your trade, you should not wait again for it returning to zero. You should exit your position here itself. When it again uh, reaches to the minimum lowest saturation, and again when it bounces back, at that point itself you should uh, exit your position. By this, you can you can increase your profit, and also you can increase you can minimize your loss. The second disadvantage is, you cannot make when a market goes extremely well in your trade, you cannot able to fetch the good profit from that. That means in this case you will be in the modified strategy, you will be go for long position here itself, and you will be exiting your trade here. But before consider like if you place a buy order at thousand at price thousand, and you are uh, at exit point it comes around thousand hundred, but the highest point between this entry and the exit points went to 1300 something like that. But when it comes to the exit point, it again went. It starts with 1000. It went till 1300, and while you are exiting your position, it will be 1100. Means you knowingly you are losing the 200 points. As you can understand what I am saying, so that you can place some fixed target that should be at maximum level. In my analysis, I found that for the crude you can place the target level at 90 or 100 points from the entry point, and also the stop loss at 4500. Why am 4500 45 points or 50 points something like that? Why I'm saying like, if you are going for the buy position, sometimes it will go below and it may increase. It will not go beyond 45 points. If it go beyond 45 points means it will your loss will be within the 4500, or it might if it goes against your trading also. If it exits before below 45 points in the exit point, you can reduce your loss to 4500 or even below 4500. This is one of the solution. Now we can see how to apply this strategy for the stock market for the long term. I am taking considering one of the good stock which is traded in Nifty 50 or BSE, Sensex, something like that. I can take the HDFC Bank. I'm just opening in a new window. I'm just choosing the coppock, and in this I'm changing the interval to week since I'm going for the long term. Yeah, I'm zooming this out. Okay, just apply this strategy as I said before in the crude oil. You can go for a long position at this point. At this point means in the at the charting you should enter here this point, and you can exit your position at it reaches the saturation level and it went here, and it's showing the slight deviation from here, so that you can exit your position here. That means you will be placing here, you will be placing your entry point here, and you will be exiting here. This profit you can take. And also we can go here. Here you can see another coppock. It decreased and went to the saturation point, and you are placing the entry here while it's again bouncing back. That means here you should enter the position at this point, and you can go till here, this point. This point you can see some deviation occur, so that uh, you will be entering the position here and you will be exiting the position here. You can take this point profit. And here I already discussed this point. You can go back somewhere. Consider, you will be entering the position here, and you will be exiting the position here. You will be taking this points profit. And also see, it is actually reflecting the uh, pricing thing in the coppock. As you can see, here you can go for the entry. That means here, and you will be exiting your position here, so that you will be saving this point, as well as you will be exiting your position before itself, before it is getting lower. Some and also you are already placed the fixed target and fixed stop loss. If it goes above, if it goes till the fixed profit, means you will be enjoying that fixed profit. And also if you exit the point is below the fixed profit, also you will be gaining some profit. And at the same point, if the market is going moving against your trade also, your loss is restricted within 45 points. That means 4500. I am considering this in the case of crude, I'm saying. Like this, you can fix your own uh, target and the stop loss for the stocks based on the relevancy in the market. This is what the kappa curve is. Please like, comment, and share our channel and subscribe to RSK Originals. We will do educational, entertainment, and technical videos, and also we discuss lot of indicators and factors on trading purpose in our future videos. Thank you.